Hello guys, welcome back to my channel. In this good occasion, we can meet again and talking together about cryptocurrency. But before that, don't forget to like, comment, share, and subscribe, and watch all video of this channel.
1.26 billion USD in Ethereum option expire on Friday and bulls are already to push ETH price higher. Ethereum network developers confirmed September as the date of the upcoming merge, a move which prompted traders to flip long on ETH. Others, ETH 53% rally between July 13 and 18 gave bulls an edge on July's 1.26 billion USD monthly option expiry. The move happened as Ethereum developers set a tentative date for the merge, a transaction out of the burdensome proof of work (VOW) mining mechanism. According to some analysts, by removing the additional ETH issuing used to finance the energy costs required on traditional mining consensus, Ether could finally achieve the ultrasound money status. Whether or not sound monetary policy revolves around constantly changing the issuing and burning rules remain an open question. But there's no doubt that the Ethereum developers' video call on July 14 helped to catapult ETH price. On July 26, the sudden dramatic spike in Ethereum network active addresses raised multiple speculation about whether Ether is targeting its previous all-time high. Analytic firm Sentiment reported that the number of 24-hour daily active addresses reached 1.06 million, breaking the previous 718,000 high set back in 2018. Theories such as Binance doing a maintenance sweep emerged, but nothing has been confirmed yet. The main victim of Ether's impressive 20% recovery on July 27 were leveraged bearish traders short who faced 335 million USD in aggregate liquidation and derivative exchange, according to data from CoinGlass. The open interest of Ether's July monthly option expiry is 1.27 billion USD, but the actual figure will be lower since bears were overly optimistic. This trader got too comfortable after ETH stood below 1,300 USD between June 13 and 16. The pump above 1,500 USD on July 27 surprised bear because only 17% of the put sell options for July 29 have been placed above the price level. The 1.39 call to put ratio shows the dominance of the 730 million USD call open interest against the 530 million USD put options. Nevertheless, as Ether stands near 1,600 USD, most bearish bet will likely become worthless. If Ether price remained above 1,500 USD at 8 a.m. UTC on July 29, only 80 million USD put option will be available. This difference happen because a right to sell either 1,500 USD or lower is worthless if Ether trades above that level on expiry. Below are the four most likely scenarios based on the current price action. The number of option contracts available on July 29 for call and put instrument varies, depending on expire price. The imbalance favoring each side constitutes the theoretical profit. Between 1,400 and 1,500 USD, 100 to 120.400 calls versus HT 1,400 puts. The net result favored the call bull instrument by 60 million USD.
Well, maybe just this what I can share with you, and don't forget to like, comment, share, and subscribe. And thank you very much. See you.